Ladies and gentlemen, welcome back to the Crypto News Podcast. Your host here, Matt Zahab. We are buzzing as always. Folks, my guest is an absolute trooper today. Normally, he resides in beautiful Miami, but we have him in Australia today visiting some family. We are recording at 4 o'clock local time for me in Toronto. 6 a.m. his time, 5 a.m. his time. He's up and buzzing. I absolutely love it. God knows how many coffees, how many Red Bulls, who knows? But either way, pumped to have him on. Sid Powell is on the show today, CEO and co-founder of Maple, the leading on-chain asset manager for institutional credit. Can't wait to get into this one. Sid has an institutional and a background in debt capital markets and structured lending. He co-founded Maple in 2019 to build the rails for institutional lending on-chain. Prior to Maple, he worked on over $3 billion in corporate bond issuance and served as treasurer at an Australian commercial lender. Today, Maple has gone absolutely parabolic and has originated over $7 billion in loans and currently manages $2.4 billion in assets across lending, structured products, and yield strategies. Can't wait to get into this, Sid. Welcome to the show, my friend. Pumped to have you on, and thanks for being such a trooper and just buzzing this early in the morning.
No. Thanks for having me on, Matt. Glad to be here. And the answer is 3 coffees. That's by 6 a.m.
I love it. Oh, we'll start with that. I've tried to quit coffee many times, and I can't do it. By day 2 or 3, the last time I did it was in February when I was in Mexico, and my girlfriend would wake up and she'd go to the coffee shop, get a coffee, and the smell would give me a headache. Once I would smell coffee, my head would start pounding, and not like a little headache, literally as if I was banging it off this microphone. So I don't know if you ever tried to quit, but if anyone has, please tell me how, because I'd love to, and I can't. I'm a full-on caffeine addict. I freaking love it.
I do not want to quit. I think gives me, helps give me an edge in the mornings. And, if I go to the gym super early, I'd take a Red Bull or one of the other energy drinks with me. But the last time I did try and quit was back in 2017. I did a month with no coffee, no alcohol, and no sugar. And then the first coffee I had at the end of the month was unreal. It was like the best best coffee of my life. But I don't want to have to go through a month without it to get that again.
100%. I've gone no booze many months. In fact, I did no booze 60 days in a row earlier in COVID, and it was super easy. Walk in the park, nothing, but literally no coffee. Day 2, my head pounds, and I swear my hands get a little sweaty. I feel like I'm going through withdrawal. It's not good, but anyways, we'll jump into the crypto side of stuff. And I guess this shout out Caffeine for sponsoring this episode here. Okay, let's jump right into it. Before we get into your background, maybe we can say that for a little later on in the show. The convergence of tradfi and crypto, literally the trend present day. There's crypto corporate treasury goes popping up left, right, and center. There's institutional lenders like yourselves. We're getting into private credit. Everything is coming on chain. We're finally seeing it happen. We've been waiting for this for God knows how long, and it's finally happening. Back in 2019, when you co-founded Maple, how long did you think it would take for this sort of year, for 2025 to happen, which I personally think is the first real year? Obviously, we had the ETFs and everything, a couple of years ago last year, but I would say this year is the year of institution and crypto, how it's really converged. We're finally here.
Yeah.
Wall Street and Web3. What year did you think that this would pop off?
Well, I'll start by saying I would have been wrong, but initially, my co-founder and I started Maple in 2019. Kind of launched the product properly in 2021. I had felt like 2022 was going to be the year that the institutional adoption was going to happen, because if you look back at what was happening then, you had pension funds investing in crypto. You had most banks had blockchain teams at that stage.
Yep.
And, and FTX had been looking like it was going to get regulated.
Yep.
And so I think a lot of people could be forgiven for having thought that 2022 was going to be the year. Obviously, that didn't turn out to be the case. But I do think nowadays, 2025, with the amount of regulatory support that's coming through, I think a lot of tradfi firms now feel like they have the air cover or kind of the green light to actually do something in crypto, whether it's launching a stable coin, as I think some of the banks are looking at, or whether it's making crypto trading available to their customers like interactive brokers and other, Web2 brokerage firms are, or whether it's doing some kind of partnership like JP Morgan and Coinbase have been doing. I think 2025, you're really seeing that take off in a much bigger way.
Yeah, it's pretty wild when you think about it. I mean, everything you just discussed, it's like the floodgates have opened. Like it is literally here. I think one of the only pieces left in regards to the missing puzzle. The Coinbase and JP Morgan, where it's like people like my parents, for example, aren't going to
Yeah.
fire up a Coinbase app, but if they
Hmm.
go to their bank, if they go to, in Canada, we have 5 big banks that dominate everything: TD, CIBC,
Hmm.
RBC, Scotia, BMO. It's a huge monopoly. It's a
Yeah.
mafia. If those guys have crypto rails and crypto products more than just stocks within and ETFs within the banking platform, I mean, I think that's sort of the next layer of blowing the top off. You know what I mean?
I agree. I think Australia's kind of similar market
Yeah.
setup, right? You have, four major banks plus Macquarie there. And once they start offering crypto products, that basically extends coverage to most of the population. But I think one of the other proxies I look at in terms of how institutional adoption is taking off for crypto this year is just the number of crypto companies that have filed confidential IPO documents. And
Yes.
I think most recently
Kraken too. Yeah.
we saw Figure, but we've seen
Yep.
Kraken, Kraken bullish.
Yep.
Circle obviously had a very successful IPO. And those firms, even back in 2022, I don't think would have contemplated IPOing that year.
Yep.
So I think this is,
100%.
it kind of shows that we've actually, I think, reached the level that we did in 2022 and then gone on to surpass it.
Yeah. Well said. Again, wild times, and I think we're in a great spot.
Indeed.
And you and I, which we'll get into later, you and I both think Bitcoin has a lot of room to grow. And
Mhm.
I personally think when it happens, it's going to be vicious. It's going to be one of those run-ups that we saw. I missed the 2021 run-ups when I would go to
Mhm.
bed and Bitcoin would be like, 30K, 35K. I'd wake up and it would be 40K. And like now, if it
Yeah.
goes up 5K, it's like, okay, it's not that big of a
Yeah.
deal.
Yeah.
But going
Yeah.
from 35 to 40 during my 7 hours sleep, like, I
Yeah.
was waking up running around the house like a little boy. Like I was pumped. But I think we're gonna see a couple of those nights coming around. Remember, we'd wake up and we'd be like, "Oh, China
Yeah.
pumped our bags." Like I think that's gonna
Yeah.
happen. But we'll save that for the end of the show. Private credit.
Yeah.
This is
Yeah.
Maple's bread and butter. This is what you guys are doing. Also, I'm
Mhm.
biased. I love the name Maple. Maple is very Canadian. So shout out you guys for doing that. It's just like I friggin' love that every time on your website. It's awesome.
You know where the name came from? I mean, one, we have a lot of, affinity and respect for Canada. Our CTO is Canadian, and one of our previous, pivotal members of our team who led the early smart contract development was also Canadian. But the name Maple actually comes from the idea of the debt stack. So you have senior, mezz, junior, and we always thought of this as kind of layers of a pancake. And then you have this concept of the cash flow waterfall where, the guys at the top get
So
paid
good.
first, and then the mezzanine guys and then the equity guys get paid last. So, this always kind of resonated as maple syrup getting poured over
Oh,
pancakes.
so
And
good.
my co-founder and I, when we started, a lot of fintech names were just half of a finance word kind of stitched together with half of a tech word and impossible to remember. Nobody could spell them to look them up on Google or send you an email.
Yep.
And so we wanted something simple and memorable. So that was why we kind of ended up with Maple after that imagery.
I love it. I mean, it's so good. And it's so opposite of TradFi, where like every financial institution has like black or stone or
Yeah.
rock in it.
Yeah. And then they have a blue logo
Yeah,
because
I
blue is
love it. All
trusted.
right. 100%. Let's talk about the private lending market. I feel like a lot of the listeners perhaps aren't, I don't want to say too in tuned, but the private lending market. I'm a rookie in this as well, but this is a multi-trillion-dollar market that only the creme de la creme and the 1% get access to. Crumbs like myself cannot get access to private credit market unless you know someone. So before
Yeah.
we get into what you guys are doing and how you're taking the private credit market on chain, give us a sort of quick, 2 to 3 minute spiel, TLDR, on how the private credit market works in traditional TradFi sense.
It's a good question. So private credit is about a $1.5 trillion market. A lot of that growth has happened in the last few years. Previously, the market would have been bank lending and bank loans.
Yeah.
But what's happened is that banks have pulled back, and now firms like Ares, Apollo, Blackstone are really dominating this market. They are the biggest players in private credit. So what does private credit refer to? It's private, which means these are not traded bonds, notes, public debt that has ratings. These are bilateral facilities where one credit fund, sometimes they're syndicated, but effectively a credit fund lends to a corporate borrower. And these loans can be anywhere in the realm of 10 million to, billions of dollars. That's, so it's a very, wide range. But effectively, what's happening in the private credit space is that companies borrow for growth, but the loan terms can typically be 3 to 5 years, and
Yep.
they're often have interest rates around 12 to 15 or 12 to 16%. So it's
Yep.
typically a high yield space. And as you said before, this is available to the top 1%. This is a product for accredited investors because the returns that people are trying to generate from these funds are often 13 to 15%. So it's very juicy yields, and it's a very kind of bespoke, sophisticated market.
Yep. Well said there. And yeah, very, very different. I guess one last thing just to set the table before we get into the
Yeah.
nitty gritty with Maple and how you guys are, using private credit on DeFi rails. But how does private credit differ from traditional sort of credit, like me walking into,
Yeah.
RBC, the biggest bank in Canada, and saying, hey, I need $1 million, and them saying, well, it's going to cost you, I don't know, 8% kind of thing. Walk us through how that differs?
So the difference is that the banks largely don't participate in this market because over time, banks have gotten more conservative and I would say less useful to the private sector. Instead, what banks will do is they'll focus on real estate loans. And this
Yep.
is partly due to regulatory reasons where the regulators, the Basel Committee wanted banks to just deal with very simple kind of resi mortgages. And so in the business space now, the folks that banks will deal with will be the very large companies, your Apples and publicly listed companies who are
Yep.
absolute behemoths, and they'll get loans for, low to mid single digits. And then they'll deal with, your mom and pop borrowers who want to purchase a house.
Yep.
But it's kind of a barbelled market. And what's happening is that this middle, so this would be, Matt, if you tried to set up a company that manufactured widgets and you grew it to a certain size and you needed a 10 to $15 million loan. That's where instead of going to a bank, you are actually more likely to go to an Apollo or a Blackstone
Bingo.
or an affiliate, one of these credit funds, and you're going to have a much better chance of getting a loan from these guys, but it's going to cost you. These loans are
Yeah.
generally higher rates than bank loans used to
So
be, and it's
risky,
creating distortions. Yeah.
riskier business equals riskier loan. That's sort of the name of the game with the private credits, right? Where it's like owning a house, usually pretty legit, pretty safe. Apple, pretty legit, pretty safe, prints billions of dollars a year. But if you have a high growth business and you need money quick, then you need a good chunk of money. That's when you go private credit because no one else is going to give it to you. It works for both sides on the party.
Yeah. In effect, but I just caveat that this is not like payday lending for business. Like these
Yeah.
are still, it's very legit. The
Yeah.
underwriting is very sophisticated. But yes, in essence, that's what's happening.
Gotcha. Okay. And now I love to do the sort of problem and solution. Walk me through, and there's not really a
Yeah.
problem because again, private credit is a like you said, a $1.5 trillion industry. It works, but it can be better. Enter Maple and the solution you guys are providing. Walk me through the
Yeah.
problem / issue. Again, it's not huge, but it's there. Walk me through the problem / issue with current private credit and how you guys, and just private credit on chain, on DeFi rails in general, is just a gazillion times more efficient.
It's a good question. So first of all, it is more efficient because we settle the loans in stable coins, but that's not why this is happening and why it's taking off. But to just kind of, explain some of the benefits. So when we do a loan to a customer, we send them, let's say you wanted to borrow $10 million, we send you the $10 million in stablecoin, so it instantly hits your wallet. You can do this after hours, you can do it on a Saturday, you don't have to do it during banking hours. There's no cost if you're in a different country. So it doesn't cost us any more to send a $10 million loan to a borrower in Japan versus one in Canada versus one in London. So you do get full global access and distribution. But a lot of people get kind of wrapped around the axle in the idea that you have to go and produce this technology that's 10x better for anyone to use it. And then you have to somehow get a committee's approval to be able to go out and kind of serve customers. And I think instead, what you need to look for is the underserved people who are not benefiting from the current setup in private credit. And
I like that.
the customers we serve are those who are crypto native. So we have over $1 billion loan book at the moment. We have over 3.3 billion. Sorry, trillion would be a great number, but we have over 3.3 billion in assets under management. And our clients are typically prime brokers, crypto hedge funds, family offices, high net worth individuals, folks who hold Bitcoin or ETH or Solana or XRP, they hold one of these large cap tokens. And because they want to borrow against these tokens, there's no credit funds, there are no banks who will lend to them. And that's where Maple steps in. We provide them loans against this asset. We think it's pretty good credits. And then on the other side, we source funds from investors and from capital allocators to lend. And that's our core business. So a typical loan from us, Matt, would be an institution comes in, they have $10 million worth of Bitcoin. We lend them a $7 million loan, and we keep the Bitcoin as collateral in case the price starts to drop. And then if that occurs, we ask them for either more Bitcoin or to pay back some of their loan. But that's kind of the core of what we do.
Interesting. Gotcha. Okay. So
Yeah.
Maple predominantly right now is just looking after the big boys and the big gals in the crypto space.
Yeah, but a large range, like not solely the really big players. We do family offices. So we do, a high net worth might have held Bitcoin for a long period of time, and now they want to retain the upside exposure to Bitcoin. They don't want to incur a huge tax bill by selling it, and they want to purchase a house for their family. So we can do anything from those types of loans to a large Bitcoin miner, wants to borrow to purchase either more equipment or fund OpEx. So we'll lend to them. We lend to exchanges. So we do cover a large range of corporate and institutional clients. But what we've done is we've kind of, I don't say pioneered, but we've focused on this niche area of private credit, which over time we think is going to scale to hundreds of billions of dollars. It's worth noting there's only about $20 billion worth of lending against Bitcoin today. And we think that if Bitcoin doubles from here, you could easily see that go to 200 billion over the next couple of years. And we think institutions who love private credit are really going to love this asset class.
Oh my God, they're gonna be, I don't even, what's the right word? Horny as hell. Like they're going to lose their minds over this. And just a little caveat as well. Sid brought up a great point. One of the things the rich do to get richer, for the folks who are unaware and aren't in that bracket like myself, when you get to that level, you don't sell off your assets. You take loans against your assets, and that is how you live your day-to-day life. And you go to people like Sid and incredible corporations like Maple who, give you a fair rate, and both parties are happy. That's like a huge part of the game. And as the total crypto TVL continues to grow, and as Bitcoin and the few assets that people never want to sell, like Bitcoin, I mean, I guess really only Bitcoin, maybe Hyperliquid, throw in there, but
Maybe.
you know what I mean? Maybe.
Yeah.
But people don't want to ever sell their shit. And what do you do? You got to take a loan, enter Maple. So I think you guys are definitely, you're in the driver's seat right now.
Well, I think I wholeheartedly agree with you on never wanting to sell Bitcoin. And I think, just to elaborate on that, the play that, the very wealthy did over the last few decades was you hold your assets, you want to hold financial assets, because as the dollar has been continually deprecated and depreciated, that pushes up the price of financial assets. One way inflation manifests itself is that the price of Apple stock goes up, right? Because a dollar is now worth less than it was before, which means the price of everything has to go up, including financial assets. So the very wealthy don't denominate their wealth in dollars, as in they don't keep it in cash in the bank. They keep it in financial assets or real assets, which appreciate. And I think for our generation, millennials, Zoomers, the newer generations coming through, a lot of them are priced out of the real estate market, which was what boomers accumulated most of their wealth in, and instead they're looking at alternatives. Real estate can't appreciate at double-digit compounding rates for the next 20 years, because otherwise you're going to end up in a world where a house costs 30 times somebody's annual salary. So it's just, mathematically impossible. However, Bitcoin compounded at 54% over the last 7 years. If Bitcoin continues to compound even at a rate north of 20%, it becomes an incredible asset for the younger generations to own, to accumulate wealth. And I think they should look at borrowing against that in the same way that boomers borrow against the equity in their house. So you retain the upside, you don't cop a tax bill, and you can fund lifestyle purchases and continue to compound your wealth. I think Bitcoin is the wealth vehicle for the younger generation, and we want to be supporting that and lending against it.
You're literally, I mean, you're preaching to the choir here. I like to at least go at my guests a little, like not, be
Yeah,
full on devil's
sure.
advocate, but disagree in some capacity. You and I couldn't be more aligned in this. I've told so many of my friends this, and I get asked like, oh, Matt, well, you're 30. I just turned 30 this year. I'm 95. Do you have any interest in buying a house? Zero, none whatsoever. Like, none. When I have a family, yeah, you should probably have a family house, but in the meantime, no. our
Yeah,
our the opportunity that my parents and my friends' parents had, the opportunity that the boomers had in Toronto, when you could buy a house for 150K, sit on it for 30 years, and it's worth 1.5 mil,
yeah,
we will hopefully have the same opportunity with Bitcoin. It's just
yeah,
not physical. But again, when our
yeah.
parents were around, when you and I went to university, we had computers. When my parents
Mhm.
went to university, they, those weird little library things where you had to roll it out and go into the aisle and take out the book. Like, that's what they had to
Yeah,
do.
yeah,
Our
yeah.
world is moving
Totally
more
different.
online, completely different world. And again, it's very cliche to say it's, digital land or whatever. But guys, for the younger folks, your opportunity is not in real estate. Unless you find a
Mhm.
great place in a great neighborhood that's maybe on the water or whatever. It's not like shooting fish in a barrel like it was for our parents. Go buy yourself some Bitcoin, because that is the same as buying a house. Nor Sid or I are financial advisors, but it's good
Yeah,
to see that we're aligned on this. So,
yeah, yeah. 100%. 100%.
anyways, quick shout out, sponsor the show, Prime XBT, and then we're gonna get right back into it. Huge shout out to Prime XPT, longtime friends and longtime sponsors of the Crypto News podcast. We love the team at Prime XPT as they offer a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet. You can easily design and customize your layouts and widgets to best fit your trading style. Prime XPT is also running an exclusive promo for listeners of the Crypto News podcast. Use the promo code CryptoNews50. That is CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Again, that is CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. And now back to the show with Sid. Okay, Bitcoin. We just kicked it off with Bitcoin. You and I are aligned on the whole Bitcoin being, the same opportunity as a house in the 90s.
Yeah.
Do you think Bitcoin's going to pass 150? You and I are in the same boat here. Why do you think that?
Yeah, I think it will pass 150 this cycle. Obviously, I'm not a trading expert, so my rationale is the relatively simplistic observation that every cycle it goes up by multiples, but it's kind of declining cycle, a declining multiple
Yeah,
as it becomes more institutionally held and more widely adopted. It takes more trading volume to kind of move the needle,
bingo.
and so I think
Yeah,
it's harder for Bitcoin to do a 5x in a given cycle, but there's still enough juice for it to do, I think a 2.5 to 3x. And so for me, I think that price target is somewhere in the 150 to 180 range this cycle. Long term, I think it's going to do much better than that. But some of the catalysts I see this cycle, continued institutional adoption. I think when you look at the history of ETFs, you see that the volume and the inflows into gold ETFs just continued to accelerate in the first couple of years after they launched. And I think you're seeing that with Bitcoin. You'll continue to
yeah,
see inflows. You've seen, hedge fund luminaries like Ray Dalio suggest that people should consider having up to 15% of their portfolio in gold and Bitcoin and some of these inflation hedges. So I think you're just every day somebody new discovers Bitcoin, and now there are now more vehicles than ever for them to get into it, whether it's an ETF or whether it's connecting their JP Morgan account to their Coinbase account. I think this is going to continue to propel upwards buying pressure on Bitcoin. So for me, I think it's 150 to 180 this cycle. And then obviously longer term, I think it's going to continue to do much better than that.
yeah. My only worry is this whole paper Bitcoin thing. I mean, just like, Sailor being a Giga Chad, buying like $1 billion of Bitcoin every week, Meta Planet, all these
Yeah.
guys coming in, literally buying 10 figures worth of Bitcoin. I'm just like, I know there are a lot of guys who got in, 2011, 12, 13, 14, where they were also Giga Chads. And I mean, spending 100K on Bitcoin in 2012, like, good Lord,
Yeah.
you deserve a statue,
Yeah.
in your city. But, and then to hold it this long, like, I love
Yeah.
when people say, oh, if only I bought Bitcoin in 2012. It's like, man, said if I bought Bitcoin in 2012, I don't even think I had
Mm.
10K in 2012, but if I did have $10,000 in 2012 and I put it all into Bitcoin, there's no chance I would have held it this long. I probably would have
Yeah.
been out after like a 10x, let alone a million X, So
Yeah.
story
Yeah.
for another day. Bitcoin DeFi. you're big on this too. You think this is going
Mhm.
to continue to pop. I've had a good amount of Bitcoin DeFi fanners on the pod recently. Usually that's a bit of a good sign when people are new incumbents have not just entered the space, but these are builders who have been head down for the last couple of years, and their hard work is finally coming to fruition, and the fruits are finally starting to, to be bared. Tell me why you think Bitcoin DeFi is finally starting to pop off, and how much room it has left to grow.
Well, I think there's always been a certain allure to Bitcoin DeFi because, the Bitcoin market is the largest one within crypto. So there's this idea that you have this massive install base of people holding Bitcoin. And if you can just offer DeFi products to them, it's going to eclipse anything you've seen in, another DeFi apps on
100%.
Ethereum. So that's the kind of the allure and the thesis, and that there's a tremendous amount that could be used for collateral, for borrowing, for perps, for trading activity. And so at Maple, we've always been interested in Bitcoin yield. And so that was kind of what pulled us into the Bitcoin DeFi sector. We obviously do loans against Bitcoin. We do loans against wrapped forms of Bitcoin. But Bitcoin yield, I think, is a market that nobody's managed to crack so far. And there's about 4 principal ways you can earn a yield on your Bitcoin. There's lending it, where you take counterparty risk. There's staking it, which is what we do in partnership with CoreDAO. And what we've looked at in the Bitcoin ecosystem, there's trading it in a market neutral way. So you buy and sell the volatility. And then there is writing covered calls. So effectively, you're selling a portion of the upside of the future appreciation in your Bitcoin. So really, you're always going to be doing one of those 4 things. And earlier this year, we launched a staking product, which has had up to about 180 mil in AUM. And we've done this in partnership with CoreDAO, and they're building out a Bitcoin DeFi ecosystem with the idea that Bitcoin's going to have some security issues in the next few years as miner revenue starts to shrink.
Yep.
And so what they've done is they've created a proof of stake chain, which allows people, to earn a yield by providing, validation for the network. So I've done a lot of research into other Bitcoin players like Lombard, Babylon. I think the space is super interesting, and I think we're seeing a real renaissance in terms of Bitcoin DeFi this year. It's unclear who the winner is going to be at this stage, just given how early it is. But I think what you're seeing is that there's a tremendous amount of interest in the space, and that a real sense that whoever cracks Bitcoin DeFi unlocks a market worth,
crazy.
tens or hundreds of billions of dollars at this stage.
Yeah.
So we have this Bitcoin yield product, and the folks who use it, which tend to be high net worths, corporate treasuries, what they really like about it is you put in Bitcoin, you get back Bitcoin yield, and you do it in a way where there's no slashing. Your Bitcoin is held in custodians. And I think we're going to be launching a DeFi version of this product where anyone can permissionlessly put in CBBTC, a wrapped BTC, and then use that. They get back a liquid yield version of it that they can use throughout DeFi. And I think that's where you really unlock a lot of growth potential, because, Matt, you can then use that for collateral to borrow against, or you could use that for yield-bearing collateral to trade perps. You're obviously a fan of Hyperliquid, and I think we would love to see yield-bearing Bitcoin on Hyperliquid as collateral.
That'd be incredible. Wow. You gotta give Jeff a call.
Yeah,
Let him know.
yeah, would love to chat with them. But I do think you're seeing one of the trends we observe is that whenever an institution comes in, the first thing they do when they get to the space is they buy Bitcoin. That's what brings them in, and that's what they're most interested in. And then immediately after that, they're thinking, can we either borrow against this and lever it up, or can we get a yield on the Bitcoin? And that's where I think Bitcoin DeFi is going to be a really powerful tool for bringing institutions into the space.
Yeah, well said. Wow, you're on a roll here, Sid. A couple more questions and we'll wrap up. The DeFi as a whole, not just Bitcoin DeFi, with the current regulatory landscape, I mean, heck, a couple days ago, not the SEC, but one of the governing bodies in the USA just said, hey, LSTs, liquid staking tokens, green light, floodgates are open, do what you want with them, they're safe, not securities, blah, blah, blah. I think it was Lido actually that dropped like 2% on the news too, which is wild. It was one of them.
It dropped 2% on the news.
It dropped 2%, which is like, what's going on? I mean, sometimes I don't get it. In theory, it should make it rip, but c'est la vie. That's why we're not traders. Thankfully, I didn't trade that one, but either way. But just present day DeFi with the US Gov being so pro crypto. Again, I'm Canadian, but what Trump is doing has been selfishly great for my bags personally, but I do feel like Trump and the whole team and the establishment are I think they really want crypto to win. And I think they
Mhm,
finally understood, one, they should be forever indebtful and grateful to Paolo Ardoino and the Tether team. But if
mhm.
they make DeFi win, I do think that this could keep the US dollar dominance alive, and stablecoins could be a huge part of that, you know? Like,
Mhm.
anyways, just going into that thought there, your thoughts on obviously the Genius
Yeah,
Act with stablecoins and DeFi, present day DeFi and regulation in the States, green light special. We love to see it.
100%. There's a lot of things to unpack on the regulatory front that I think are very bullish for the space. I mean, first of all, on the stablecoin front, as you noted, this can kind of help further extend dollar dominance. I mean,
Yeah.
Treasury Secretary Bessent has been vocal about saying that stablecoins are going to be a source of trillions of dollars of
Yep.
demand for US
Yep.
government debt, which
Yep.
ultimately, as you have more demand for debt, it brings down the cost of borrowing, which is good for the US. It also allows the government to maintain a high budget for services. And you can see that I think it was last week Tether passed South Korea as they're like a top 15 holder
Yeah.
of
Holder of T
US,
bills.
yeah, of
Yeah.
T-bills, right?
Yeah.
Which is
That's
crazy that
insane.
I mean, if
That's
you imagine
insane.
saying a few years ago that like a non-sovereign actor, a private company is going to be one of the top 15 largest holders of T-bills, you would have
That's
been
so wild.
laughed out. So Genius Act unlocks a lot of this, and I think this was a high priority for the administration to get in place because it now opens the doors for banks to come in and offer stablecoins. It also stablecoins are going to ultimately benefit consumers because I, like everybody else, pays for a lot of things with a card, and anytime I do that, I'm usually getting passed on a 3% fee as a
Yep.
surcharge for the Visa network or the MasterCard network. And stablecoins take away any need for that completely. The
Yep.
the companies who issue stablecoins have a totally different business model, and they don't need to
Yep.
charge us for fees for using the payment network. So I think that's
Magic
fantastic for consumers.
magic internet money, baby. You'd love to see
And
it.
then and then you've seen the Clarity Act is going to provide
Yep.
market structure within the US. But I think I commented on this about a week ago, but you had Project Crypto and a really positive pro-innovation speech from Chair Atkins of the SEC. And he was talking about one, how progress ultimately benefits consumers, but sometimes we err too far on the side of consumer protection and it stultifies growth. And I think what they're trying to do at the SEC now is engage with industry, trying to give carve outs to DeFi and to crypto actors, and come up with more of a principles based approach to regulation where if you're a startup, it shouldn't cost you millions of dollars a year for compliance. It should be something that you're able to ease into as you grow, and you should just meet basic requirements of disclosure and transparency for your customers. So I think this is hugely positive. It's going to enable more startups to come out in crypto and ultimately offer cheaper, better, faster services for consumers. So ultimately, consumers win from this. So I'm obviously biased as a builder, but I think this is a really positive time. And I do really applaud the moves by the regulators in the US to kind of engage with the industry and give a green light for builders and startups.
Well said. Sid, what an episode. Before we let you go, any Maple news popping off over the next couple days, weeks? A three-part question here. Any Maple news? And where can our listeners find you and Maple online and on socials? And we'll start with those two.
For sure. So last week we published our Q2 report. So Maple had a pretty bumper Q2. We crossed 3 billion AUM. We also got to
Congrats. Well done.
yeah, thank you. We also got to cash flow positivity, and we updated our guidance. So for the rest of this year, Maple wants to hit about 5 billion in AUM. We want to hit around 30 mil of ARR, so recurring revenue. And we will have the launch of our liquid yielding BTC product, and we'll have continued expansion of Syrup USD, which is for those who have been following us, this is the the more permissionless DeFi integrated product. But
Yep.
for anyone who's interested in following what we're up to, so on X we are at Maple Finance, one word. Our website is maple.finance, and then I'm at Syrup Sid on X. So would love to hear from anyone who's interested in learning more about the product. Just reach out. We'll be pretty responsive. But for anyone who's looking for yield, we would love to talk to you. And for anyone who's looking to borrow against Bitcoin or Sol or XRP or ETH, we would also love to talk to you.
Love that. Sid, what an episode, guys. What an episode with Sid Powell, CEO of Maple. Little bit of everything, the convergence of TradFi and crypto, private credit, on-chain private credit, Bitcoin passing 150K, growth of Bitcoin, DeFi, current landscape, the current regulatory landscape of crypto. Sid was on fire this episode. Really appreciate Sid coming on. If you guys enjoyed this one, I hope you did. Please do subscribe, hammer that like button, and we appreciate you tuning in. As always, to my team, thank you guys. Love you so much, and thank you for everything. And back to the listeners, keep on growing those bags, guys. Go touch some grass. It is summertime. And above all else, keep on staying healthy, wealthy, and happy. Love you guys. Thanks for tuning in, and we'll see you on the next one. Ciao.